Want to learn about the investment that everyone's been talking about? Want to learn more about this strange fund that you've heard of that holds $4.4 trillion in assets in the US alone? Need to find out if investing in ETFs is right for you? You've come to the right place. Hi, this is Clover and this is my dog Logan. Welcome back to my channel where we talk about pretty much anything that has to do with money. Today we are going to talk about a very popular investment vehicle known as ETFs, or exchange traded funds. We'll talk about what they are, we'll talk about the benefits, the drawbacks, and how you can start buying one today. By the end of this video, you should have a pretty good idea on whether or not ETFs are the right investment for you, but be sure to stay till the end of the video where we talk about exactly how you can purchase these and how you can start investing in ETFs in order to build wealth and reach financial independence. We'll dive right in, but before we do, be sure to hit that like button, be sure to hit subscribe. It helps me out a lot and I really appreciate it. So before we start talking about ETFs, I do want to put the disclaimer out there. I am not a financial advisor. I cannot tell you what index funds to pick. I cannot tell you what ETFs to pick. You have to do your own research in order to decide what is right for you. So ultimately, all I can do is educate you and then you can go off and make your own decisions. But like I said, I'm not a CFP. I am not a financial advisor. This is just information that I have learned on my own and would like to share. Before we talk about ETFs, we really have to talk about what funds are in the world of investing. A fund is basically a bucket of money that investors use to purchase different assets, whether it's stocks, bonds, or other securities. What's kind of cool about purchasing funds is that when you purchase a fund, you're not just purchasing one stock or one bond, you're purchasing an entire portfolio of different assets. The reason that this is great is because funds are instantly diversified. So they already have a bunch of things in it, and diversification leads to less risk. Diversification is really just a fancy way of saying that you're not putting all of your eggs in the same basket. So if one stock fails, you're not going to take a huge blow because there are hundreds of other stocks within a fund in order to make up for one stock or company not doing well. Think about a fund versus a stock as a box of chocolates versus purchasing a single chocolate bar. So when you purchase a box of chocolates, there's all kinds of things in there. There's chocolate covered raisin, there's chocolate covered peanuts, there's caramel creams and all of those things. And when you purchase the box of chocolates, you can't just purchase individual pieces of that box of chocolates, you have to buy the thing as a whole. Whereas if you purchase a chocolate bar, you are going to just get that one chocolate bar. So if it's a Kit Kat, you only have Kit Kats. If it's a Snickers, you only have Snickers. That's kind of how it is with funds versus stock. So the stocks are the chocolate bars, where if you buy a stock of Apple, you only get a stock of Apple. Whereas if you buy an S&P 500 index ETF, you are getting everything that's in the S&P 500, or you're getting a representative sample. So that's more like the box of chocolates. Now, what is an ETF, or an exchange traded fund? An exchange traded fund is exactly what it sounds like. It's a fund that trades on an exchange. So you know how you can purchase stocks or bonds throughout the day on the stock market exchange? Well, unlike mutual funds and unlike index funds, you can trade ETFs all day long. ETFs are kind of cool because of this option to buy and sell all day. So if you want to try and get the maximum profit and watch and buy in the dip and all of those things, ETFs are a really great vehicle for this because they're highly liquid. You can exchange them, buy, sell, trade all day long. And it's kind of like the best of both worlds between stocks and mutual funds, because stocks aren't diversified, but you can buy and sell all day long. And mutual funds are diversified, but you can only buy them once a day. With ETFs, you kind of have both scenarios where you have instant diversification and you can buy and sell all day long. Now, there are several different kinds of ETFs that you can purchase, and the amount of ETFs that you can buy are growing by the day. There are thousands of different kinds of ETFs. And the cool thing and unique thing about ETFs is that they can be designed to mirror an index, a sector, or even a commodity like gold, oil, or gas. Now that might sound a little bit confusing. What's an index? What's a sector? What's a commodity? Let's dive into what each kind of these ETFs actually are. So first, let's talk about index ETFs. So index ETFs are very similar to index funds in that they are designed to follow and mirror an index. So when I talk about indexes, I mean any index from the S&P 500, the Dow Jones, the NASDAQ, It is literally designed to have either a representative sampling of all the different funds and stocks within a S&P 500, or literally every stock, bond, etc. within the S&P 500. What this means is that how the S&P 500 does is how this ETF is going to do, or whatever index that it's mirroring. ETFs that are designed to mirror an index are going to be automatically diversified, and they're also going to be pretty low cost because they're designed by an algorithm in order to mirror an index. So you don't have somebody in there who's constantly trading day in, day out to get the investors the most money possible. Now, what is a sector? A sector is interesting in that it's really just a way to divide the economy. So we have 4 primary sectors here in the United States, and most economies have them. The primary sector is agriculture and mining and forestry, so pretty much anything to do with the earth. The secondary sector includes processing, manufacturing, and construction. The tertiary sector includes retail, entertainment, services, and even financial businesses. And then the 4th sector includes intellectual pursuits and educational services. So what does it mean when an ETF mirrors a sector? Essentially, that means that there are stocks within that ETF or other assets that mirror how a different sector is doing. So for example, you can purchase an ETF that mirrors the technology sector, and within that ETF, there's going to be a bunch of different companies from the technology sector that kind of represent how the technology sector is doing. You can also purchase financial sector ETFs where they have things like JP Morgan, Charles Schwab, Wells Fargo, Citigroup, etc. So there's a ton of different sectors and the options are almost limitless, or if there is a sector for it, you can bet there's going to be an ETF for it. Now, the last one I mentioned was a commodity ETF, and these are basically just ETFs that are mirrored to follow the value of a commodity like gold, gas, oil. Now, a commodity is basically something like gas, like gold, like oil, where the price isn't really determined on a bunch of different qualities and attributes. It's basically, these are products that are produced on a massive scale, and because of that, there's generally one price that the product has to follow. So when you think about why all gas prices are generally going up and down at the same time, that's because they're produced on a massive scale and the price from each producer is approximately the same, a little bit different depending on where you live. Now, these commodity funds can literally hold gold or oil or gas within the fund. So they're a little bit more risky because they're not nearly as diversified. Now, there are a few other types of ETFs that you can purchase as well. You can purchase real estate ETFs that include REITs in them, REITs, which are real estate investment trust. Basically, it means that you are holding real estate that is producing an income in some way. There are also fixed income or bond ETF funds where essentially you are giving a business a loan and they are paying you interest for giving them that loan. There's even currency ETFs, which means that you can buy currency ETFs from other countries. So if you want to buy an ETF that holds the euro, you can buy an ETF that holds the euro. The reason that people will buy currency ETFs is because they worry about the US dollar going down in value, and in order to cushion that, they purchase currencies from other countries. And then there are inverse or leveraged ETFs, and these are really risky ETFs. Inverse ETFs mean that anytime the market goes down, the value of the ETF actually goes up. And then leverage funds are extremely risky and not something that I would really recommend to anybody, but essentially they are ETFs that are leveraged, so you can get twice the amount, 3 times the amount, 4 times the amount, the value of the ETF if the market goes down on a daily basis or if it goes up on a daily basis. Now you might be wondering, how do ETFs make money? How do I make money by investing in ETFs? And it's pretty much the same for how you invest in any other investment like a mutual fund, index fund, or even a stock. There are capital gains, there are the stocks just going up in value, and also through dividends. So let's talk about how you can make money with selling funds. Basically, if you buy the fund when it's low in price and then you sell it when it's in a higher price, that's how you make money. You make the difference between when you bought it and when you sold it. If one of the stocks or bonds within your ETF rises in price, this is another way that you make money in investing in ETFs. And then there are dividends on some of the ETFs that you purchase. So dividends are basically a thank you note from a business that says, thank you for holding our stock. So here is a little bit of money just to say thank you for keeping it and going through and dealing with the ups and downs of the market. These dividends get paid out to the investors sometimes quarterly, sometimes yearly. It just depends on the fund itself. Okay, so now that we've covered how you get paid in ETFs, let's talk about a little bit of the pros and cons of investing in ETFs. Now, the first benefit of investing in ETFs is that it's a super low cost way to invest in the stock market. Most brokerages now offer commission-free ETFs, so you can buy and sell without having to pay a commission like you have to pay when you invest in stocks and you buy and sell in stocks. They're also low cost because a lot of ETFs are passively managed. Now, there are actively managed ETFs as well, so you just need to make sure by reading the prospectus on whether or not it's actively or passively managed by a professional. If it's passively managed, like most index ETFs are, then really the fees are extremely low. For example, an actively managed mutual fund can sometimes cost between 1% to 3% of the portfolio itself, whereas when you invest in ETFs that are not actively managed, the fees can be as low as 0% to 0.05%. Most ETFs are sitting around 0.15%, but still that's quite a bit cheaper than an actively managed mutual fund. Now, one of the other benefits is that there's pretty much immediate diversification if you're investing in an index ETF or a sector ETF. Obviously, it depends on the fund. Sometimes the funds will represent an entire index or it'll just be a sampling of the index, so you'll want to make sure to do your research when picking out, but the diversification is definitely nice because, like I said, you're not putting all of your eggs in one basket, so that really makes it a lot less risky to invest in an ETF. Another nice thing, like we touched on, is that ETFs are a little bit more liquid than investing in an index fund or a mutual fund because you can buy and sell all day long. So if for some reason during the day you want to take out your money, you can do that in order to invest in something else. And then another nice thing about ETFs is that they are more tax efficient. ETFs just don't make as many gains as actively managed mutual funds or when you're trading stocks. This is nice because if you have to pay your taxes on the capital gains that you're making or the gains that you're making by buying and selling, that can really add up and eat away at your investments. When an ETF buys and sells, that's considered an in-kind redemption, so you don't have to pay taxes on the gains. Capital gains distributions from an ETF are also taxed at the capital gains, the long-term capital gains tax, which is just 20% versus the normal capital gains tax, which is just taxed at your normal income bracket. Now let's talk about the downsides of investing in ETFs. Now this doesn't apply to everyone, but ETFs can encourage gambling behavior, which to me is a con, because if you are trying to day trade and trying to beat the market, a lot of the time you're going to be a lot less successful than if you had just bought and held. Index funds and index ETFs can outperform the market in the long term by just buying and holding, whereas if you're trying to beat the market, often if you're investing in the short term, you're going to lose money in the market. And because you can buy and sell ETFs all day, it might encourage you to get a little bit into the gambling of day trading and trying to beat the market. Another drawback is that there are actively managed ETFs that can have higher fees. While they might be able to beat the market, of course you have to pay a little bit more, and usually those fees are about 0.69%, which is quite a bit more than 0.15% for the average fee for a passively managed ETF. Another downside to ETFs is that not all ETFs are created equally. Some ETFs are going to be very risky, but some ETFs are going to be not as risky. Okay, so you've made it this long, let's talk about how you can purchase ETFs in your portfolio. So if you've decided that purchasing an ETF is right for you, it's extremely easy to purchase an ETF. So you can go to the brokerage account that you already use for your investments and search for ETFs to purchase. You can also open up a new account for the ETF purchasing that you would like to do. So let's say you really like the ETFs that are offered by Fidelity, so you want to open an account with Fidelity to start investing in ETFs. You can do that. You can also do that with Vanguard. Most brokerages have their own ETFs. So if there is an ETF from a specific brokerage, generally I recommend you buy that ETF through that brokerage because there are less fees than if you bought a Vanguard ETF in TD Ameritrade or E-Trade. I definitely recommend you do your own research in terms of what ETFs that you want to invest in. There are some very popular ones like SPY, which mirrors the S&P 500. There is QQQ, which tracks the NASDAQ 100. Generally, buying ETFs is a very easy thing for you to do. You can even purchase them in Elvest, Robinhood, Acorns, whatever. whatever it is you're investing in. Now, you're probably wondering, what do I think about ETFs? Do I invest in ETFs? And the answer is no. Right now, I don't invest in ETFs because I'm working on building the foundation of my portfolio that is heavily focused on index fund investing and real estate investing. Now, is that to say I won't ever invest in ETFs? Absolutely not. I plan on investing in ETFs with some of my fund money because ETFs, even though I think they're great and a great option, they're just not as great for me as index funds. I am a lazy investor. I like to put my money into my investment and not have to worry about it for years. With ETFs, I think they're also great, but they're slightly more expensive than just investing, buying, and holding index funds, so I might as well just buy and hold index funds right now. For right now, I'm just focusing on building my foundation, and I'll eventually have a small portfolio of ETF investing as well. So that's pretty much it. That's all I have for you guys today. Thank you so much for watching. If you haven't already, be sure to hit the like and subscribe if this is the type of video content that you like to see. But also, let me know what your favorite ETF is down in the description below, or even if you invest in ETFs. Thanks again for watching. I've got links to other fun things, including where you can follow me on Instagram and where you can follow me on TikTok. I post there sometimes 3 to 4 times a day, so be sure to check it out. I really enjoy doing my TikToks and I get real goofy. So if that's the kind of thing that you're into, be sure to follow me there. And thanks again. I'll see you guys next time.